George sits serenely in his barber chair. Suddenly, he realizes he's left his wallet at home. How would he be able to pay for him and his son and his haircuts? Would he have to sweep the floor after hours? Would the barber just shave his head? Noticing Andy gesturing wildly towards the mirror, George pleads for his help. Andy smugly opens his Bitcoin Cash wallet and sends his Luddite father exactly 2 haircuts worth of Bitcoin Cash.
Hey, thanks, man.
Bitcoin Cash, the future of money, today.
Hey guys, welcome back to the weekly update. So as usual, I shared this poll yesterday on the free Telegram channel. What chart would you like to see on YouTube tomorrow? And we got 59% of the votes for BTC, and we had 195 people voting. So let's do the BTC versus USD as usual from Bitfinex, and these are the one-day candles. Last night before I went to bed, we were still in this previous daily candle, and the price was bouncing on the 50-day moving average, all the way up here to 7,100. And this morning when I woke up, the price was all the way down to 6,500. So first thing I thought, it's probably an ETF, it's been rejected or delayed or something like that. And sure enough, I went to the premium Telegram channel and I saw the guys there were discussing the situation that the main ETF, the most anticipated one, was delayed. So, you know, we've been commenting on this channel that this whole pump here was only due to the ETFs. It was only ETF hype here. So now as more and more people realizes that nothing is happening, or at least not anytime soon, well, the price is dropping. People are selling because, you know, if this was all because of the ETF, this drop is also all because of the ETF rejections or delays. You know, it's all related. And by the way, these arrows here, this arrow going from the 20-day moving average to the 50-day moving average and bouncing here, I draw these last week as soon as the price broke below the 20-day moving average, because when I made my last video on YouTube, we were still at around this level, touching or bouncing on the 20-day moving average, and right the next day we broke below it. So the guys on the premium group were asking where we are going to land here, and I shared these arrows here. We're going, most likely we're going to between 6,900 and 6,800, which is the main support, which is the neckline of this head and shoulders. And it's also at around the same level with the 50-day moving average. So we're most likely gonna go down there and reassess from there. I actually said reassess once we get there, if we get there. So we got here really vertical and really, you know, it's been a very strong drop here. If this would have been going down slowly and kind of rounding at the level of the 50-day moving average and this main support, the red line, if it would have been like going slowly and rounding here, there would still be the possibility of bouncing and making higher highs. That's why I made this arrow really slow, really small. And I also don't have the text here. For some reason it didn't save the text, but I said the most obvious support is between 6.9 and 6.8, and from there reevaluate, because it all depended on how fast it would get here, as I said. And this is too strong, the drop is too strong, you know, for this to hold. So yesterday was already pretty obvious it was not going to bounce much on the 50-day moving average and on the support here. It actually bounced at the level of my arrow here, but it just did it very quick, and now we broke below. So for the short term, now the 20 and 50 moving averages, which are, you know, the main moving averages that I use for trading, are becoming less and less relevant in this part of the market, because we're going sideways. The moving averages strategy only works when there's a defined trend, when it's either going up or down. But for sideways markets, it doesn't work. I've been talking about this as well. I stopped sharing signals because this is not not optimal to be trading here. But the moving average that becomes more relevant now is the 200-day moving average. So long as we stay below the 200-day moving average, it means we are in a bear market, bear market / sideways market. So if we were to go above the 200-day moving average, then that would be the first sign, not of a bull market, but at least the end of the bear market. So long as we stay below it, we're still in a bear market. Now, you got to be careful with this as well, because I'm sure at some point we're going to bounce and retest the 200-day moving average, try again. But you got to be careful. I wanted to show this in the 2014 bubble. We broke below the 200-day moving average and we went into a long-term bear market, but there was a time here apart of the bear market. It was a bear market / sideways market as well here. As you can see, for many months it went sideways until it broke down, but we actually went above the 200-day moving average here. It was above it for several days, as you can see. So that must have been very confusing for traders. I was not trading this personally. I own some Bitcoin here already, but I was not actively trading or anything. I bought on this dip and I just held on to it. I think it was this dip or this dip, I can't remember. It was at $600. So I was not trading this, but if I would have been trading this must have been really confusing for traders, because it actually stayed above the 200-day moving average for a long time here. Then it broke down, but it bounced again on the 50-day moving average, and it bounced again and quickly went back above the 200-day moving average. So all these were signs of recovery, that it was signaling the bear market might have, it could have been over, and from here, go up. That would have been the bias, probably what I would think if I was trading this. But you see, it went, the fact that it broke below, but it quickly came back above the 200-day moving average with, with a vertical candle like this, and stay above it for several weeks, I would say here, until it broke down. Actually, let me see how many days here. A lot of days here. 19 days, almost a month, holding above the 200-day moving average. So that was a sign of a possible bull market here. Plus it corrected already a lot from top to bottom, almost 80%, I think, from top to this bottom here. This is at 350, so it was a huge correction already, and started to go up, and it was uptrending for a long time here, making higher highs, higher lows, and it went above the 200-day moving average. So this is a perfect bull trap here. I would have been trapped probably here. So you got to be careful, because not only you have to get above the 200-day moving average, but you need to stay above it and actually bounce on it and make higher highs. Otherwise, it could be just a fake rally here, which is what we had. I am still waiting for this to happen, this year or next year, or whenever it is the end of the bear market. I'm still expecting this, which is capitulation, guys. Capitulation is a vertical movement down. You see here 1, 2, 3, 4, 5 days vertically down with a huge spike of selling volume here. This is called capitulation, and I'm still expecting this to happen before you can spot the bottom of the current bear market. We didn't have this at all. So what I expect from here on, it's more sideways market, guys. Maybe it'll take some time until we break below 6,000 and then bounce again, and then slowly go down to 5,400 and then eventually to 5,000. But I would expect this to take a long time going sideways. I think 6,000 is the level, to go sideways for a long time before breaking down, probably breaking down. Maybe we have a surprise and we go up, but I think 6,000 is still like a base that we're forming here. If you see, the volatility is getting lower and lower. The bounces are smaller every time, and the volatility is going down. So I expect to continue to form a base here at 6,000. And when I say 6,000, it's it can be from, from 7,000 to 5,400, but I would be expecting sideways boring market here for longer, for the time being. I wanted to show also the chart for the market cap. Guys, I have been sharing this, I shared this on the premium group. Actually, I've been sharing charts of the market cap since ever we broke below. Actually, I've been warning about this before we broke below the main trend line, but I would have to find the pictures. But I said main trend line broken. This is not good. We might bounce at 250 billion and then retest the main support as a resistance and get rejected. So it means as soon as we broke below here, excuse me, I was expecting to go down to 250 billion and then bounce back up to retest the main trend line as a resistance, and it's exactly what happened. And then I said we might not even bounce that much, so meaning we might not even make it to the main trend line. Next support potential bottom when 250 billion breaks is the flat support around 175 billion. So this means I was expecting this to bounce at 250, retest the main trend line and go back down. And once it goes down and breaks below 250, the next obvious support is this flat support line here that you see, this horizontal line, which is at the level of 175 billion. I have been saying this all along. I shared my next market cap chart. It was, we already went down to 250 billion and we were starting to bounce back up. So I said it seems we're going to 280 to 90 billion to retest the line, then down. I personally will be selling BTC if we get there, and also trading BCH back to BTC. That's the plan. Of course, I might change my mind as I get feedback from the charts. So this is exactly what happened. It went down to 250 and then it's been going up to retest the main trend line, which is, I said 280 to 90, and I think it made it to almost 300. So I was close enough, and I did sell BTC somewhere in these highs. I shared that in one of my recent videos on YouTube. I sold some BTC at 7,450. Anyways, I never got to trade BCH back to BTC though. But this is what's been happening. So we went back up, retested the main trend line as a resistance, and this was my last. I shared one more chart here. This one here, you see, which this one I think I showed in my last video on YouTube or in one of my videos on my website. So retest of the main trend line as a resistance soon. Be careful. Breaking above it and staying above it would be the first decent bull sign. Until then, we remain full bear. Let's see. And what do we have right now on the market cap chart? Well, you can see we got rejected. We didn't even make it to the main trend line, but very, very close. And we got rejected and we're going down. And down, right now we are below 250 billion. We are again at 237 billion, more or less. So now what do we do here? Well, we go back to the very first picture that I shared here, which was, what is it? This one all the way back here like 2 months ago, and I said next support potential bottom when 250 breaks is the flat support line, flat support at around 175, which means we're going down to this flat support here, this horizontal support, which is at the level of 175 billion. Now there's a reason I'm sharing all this and I'm talking about the market cap chart, and it's because how this is going to affect BTC, because I'm doing BTC technical analysis today, right? So how is this affecting BTC? Well, in my opinion, it's affecting BTC, but not that much, because BTC accounts for only 50% of all this price action. The other 50% is for altcoins. And out of this 50%, out of the 50% that accounts for altcoins, this 50% accounts for 1,700 altcoins in the market, which 90% of these 1,700 coins in the market, which is 50% of the total market cap, 90% of that is shit coins, and only 10% of that are good altcoins, big market cap altcoins. So what I'm thinking here, the total market cap chart needs to go down. The next obvious support, as I have been saying since forever, it's going to be 175 billion, and then we reassess from there. But if this goes down to 175 billion, I think BTC and big altcoins are not going to be affected as much as shit coins and low market cap coins, because many of them, maybe 80 or 90% of those shit coins, need to go down to near zero and stay there. So by the time all these shit coins go down to near zero and stay there, they're gonna drag the total market cap chart down, which means the total market cap chart can go down a lot without affecting BTC and big altcoins that much. I think we are in the process of flattening here on BTC. As I said, 6,000, I think it's going to be a base for several months from here on, and the volatility is going to be reducing over time. I still expect lower lows, but something like flattening and going down slowly, slow bleeding / sideways market, something like that. So guys, I think that's all that I wanted to touch for this video. I hope it was useful and informative. Check out the website for more content, because I'm only uploading once a week on YouTube, but I made a Bitcoin Cash update here the other day, and I made this. This is a very interesting video. Actually, it got a lot of shares. Many people liked it and found it very important. It's actually competition analysis within the blockchain. So yeah, I think I'm gonna leave it here. And guys, please learn trading by yourself. Go to free education. You have here coaching videos, which is trading psychology, free courses. I have 2 free courses, which are basics and not so basics of technical analysis, and then free tutorials for technical indicators and other things. So learn trading by yourself. Don't follow people's signals, and you'll do a lot better in the long run. With this said, I'll leave it here, guys. Thanks for watching, and I'll see you next week. Bye.